Today we got Tesla China numbers to talk about, some guesses about production and delivery report. The Atlanta Fed continues to swing wildly in its GDP estimates. What else do we have? We can also talk about just Tesla's Q1 performance and the stock volatility, impact of Elon's political role on Tesla's brand and finances. JP Morgan's Ryan Brinkman lowered his delivery numbers and instead of citing the Model Y changeover, talked about Elon's politics in Europe. We got some thoughts on that.
We're going to see how Elon Musk's baby mama drama may or may not impact Tesla stock price.
There we go.
You know, he's creating future buyers of Teslas, I think.
That's right.
Many of them. So that might drive future demand.
Get some first takes on tariffs. Got Israel already moving on the tariff front. Maybe we'll talk a little bit about FSD. Curious what Tesla's going to report on Megapacks for their production and delivery. The shorting continues of Tesla stock. Continues to go higher, that short percentage. So let's first talk about China numbers. Hit it.
Yeah. Whoa. So the Tesla overnight released that the China insured units, it was 21,000, which was a really big step up from the previous couple of weeks where they'd been in the 15, 17,000 type of range. And what really shocked me on this was that they actually surpassed the year-to-date figures from the prior year. So they're actually at a higher year-to-date run rate in 2025 than they were in 2024. I was not expecting that at all. I mean, it's a very minor difference, so not necessarily worth writing home about. Also important to note that that was only in China. So we still have, I think, some more weakness in Europe and in the US. So I think this is not the sort of savior where we're going to have all of a sudden 450,000 units delivered in Q1 or anything crazy like that. But what I think is more exciting about this is the run rate that we have going into Q2 is going to be a bit higher than I was personally expecting. So I think pretty good news coming out of China that they seem to be fully ramped now. Is that a fair statement in your mind, Bradford?
The run rate looked good, but I wondered about the production number that we saw. I think it would have been in February. So I'm guessing that was still a little bit on the low side. So I'm really curious what that is in March. But it's the top 4 weekly sales number into China ever for Tesla. So that's very encouraging. So I was generally also encouraged by the numbers. Also got a Model Y breakdown where the Model Y was roughly 2/3 of that number. And that's what you'd expect because there's 2 Model Y lines in China and 1 Model 3 line in China. So looked really good as far as the breakdown. We'll see what happens next quarter. Tesla just opened sales in South Korea. They had a big display over the weekend where there were very long lines for people just to like sit in a new Model Y.
Very long lines. I mean, yeah. I was kind of shocked. Like, I'm excited about the Model Y refresh, but I'm not that excited about it. I don't think where I'd go and sit in a line. So maybe that was just an anecdotal situation, but that was very surprising to me.
All right, let's talk a little bit about what we are expecting from Tesla tomorrow. So Troy was at 356,000 as far as his estimates based off of like all the VIN data he has, plus a little bit of guesswork. Ryan Brinkman, he came down from 444,000 all the way down to 355,000, basically like copying Troy's numbers.
Yeah, basically just admitting he doesn't know what he's doing, honestly. I mean, it's kind of crazy.
Ryan Brinkman blamed brand damage in Europe. Europe is less than 20% of Tesla's sales globally. It's certainly I think there could be a little bit of that in Europe because Ukraine is so near and dear to the hearts of Europeans, and Elon's a bit controversial with his takes around letting Russia have the land that they've gotten in order to stop the war. But also, so we saw Troy, his numbers went up from 356,000 to 360,000. AJ basically used Troy's number, but he came up with it with a spreadsheet. So 356,000. And I think, Matt, you were checking the Kalshi prediction market, and where was that?
Kalshi's it was right at about 350,000 last I checked. So that's kind of good. The prediction markets have been, I think, surprisingly accurate with a lot of this sort of thing in the past. I haven't really tracked them. I'm not sure if they've actually been doing Tesla production and delivery numbers for very long, but it seems to be reasonably accurate right now with where, and it has been for a while. So one of the interesting things is, like, for months, Bradford, you and I have been saying, like, there's no way, like, it's almost certain that they're going to be below 400,000 back when Ryan Brinkman and everyone else was at 450. And at the time we're saying the commentary is going to be Elon, caused brand damage with all his political actions. And then that's exactly what we saw from Ryan Brinkman. It was like, we predicted it exactly how that was going to pan out. But if you look at the Kalshi prediction markets, like, it's actually been reasonably flat for the last month or so, however long that particular market has been up. So that tells you that, like, people who are willing to like put money on this type of estimate are actually a lot better at it than all these analysts who we've known for months are just going to revise downward their estimate toward the end of the quarter, and then they've got you have to come up with some commentary for why that is. And the easy thing to do is not to talk about the nuances of bringing down the production lines across 4 plants. The easy thing to do is say, well, Elon destroyed the brand, and so here we are. It's just, like, it is actually I'm actually kind of sad that we were right about how this panned out. It's like, it's just, like, so simple and so trivial to that, like, these are people who are, like, paid well to come up with, like, well thought out analyses, and it's like so predictably shallow. It makes me frustrated.
So we are live. Feel free to comment, send in your questions. The other thing I'll say about this is the Tesla compiled analyst consensus, I believe, is 377,000. So they removed some of the analysts who didn't really update their numbers. Also, the FactSet consensus is around 400,000. I don't know what the Refinitiv consensus is, but that's what has been reported recently. Again, I don't expect the media to be fair about this, and I expect them to say that it's a boycott on Tesla. And furthermore, they'll say that everything that Trump and Republican commentators did, buying Teslas and encouraging other people to do it, they'll also say that it didn't help, and they may even claim that it made things worse. But we know it was a lack of supply from the factory in the factories across the world.
Yeah, and we don't want to, like, completely paper over, and say there's, like, no impact whatsoever from Elon's actions. I think we've been pretty balanced with our views. I think we both definitely think that there's been serious damage in Europe and in Canada, but taking on balance, the fact that those are smaller markets for Tesla, our estimate would be there's probably a slight positive in the U.S. market, just as you're attracting some new buyers. And if you look at, like, Google Trends information and that sort of thing, there seems to be some genuine interest. Now, how much that translates to orders over time, that's definitely something worth tracking. But I think the kind of simplified narrative doesn't really do justice to the nuance of what's actually happening. And I did just pull up the Kalshi delivery estimate, and right now that's down to 351,000. So we'll find out tomorrow morning whether we're right or wrong. I mean, this seems roughly in line with where we're thinking, somewhere in the 350 to 370 sort of range, would you be terribly surprised if it kind of falls outside of that range one way or the other?
350 to 370.
Yeah.
That's a pretty tight range, but yeah, I would be 345 to 385 would be my range. China did a little better than expected. In my mind, the way I was thinking about it was that China may drop by about 30% compared to what their capacity is, coming out of the fourth quarter. And that's roughly around what seemed to happen in China. Just my mental math earlier this morning. And yeah, I'm guessing that Europe and the United States dropped the ball more. So I'm guessing their decline in Model Y was closer to 50%. We'll see if that's true. James Catt was saying that
even the name just gets me. Yeah, it's like one of the best analysts out there, very nuanced, neutral views for the most part. But yeah, James Catt.
Yeah, he was saying that he saw some good numbers coming out of the U.S. late in the quarter. Now, certainly Tesla's commentary could differ. That could offer some bullishness if they talked about order flow worldwide. That might provide a potential boost. Curious what numbers we get with the mega pack, but my impression of Shanghai mega pack was that it started around February. So it didn't quite start like in the middle of January. And we're not sure how big and beefy production and deliveries were that early in.
Yeah, and one of the things we certainly saw with the Lathrop mega factory, I guess what we call it, that's the Lathrop mega factory, is that you kind of assume, okay, they started production and then they're going to ramp up, and so we'll see those that increase in volumes really hit the energy revenues. But there is this delayed revenue recognition just with the accounting standards. So even though the plant started production and is ramping up, my expectation would be there's like de minimis actual revenue recognized from the Shanghai plant, just because you've got this lag of when deliveries happen and how long revenue recognition takes. Now, maybe because everything goes faster in China, maybe that's not quite so drawn out as it is, for Lathrop, which is delivering to U.S. customers. But still, I would actually expect a sequential drop. I could be wrong on that, but it just seems like I think a lot of projects are down. A lot of construction projects are not going to be, going full speed in Q1 because, at least in like northern latitudes, there's hardness on the ground, and just construction tends to slow down, and then it'll pick up a little bit, towards spring and summer, fall. So even though the plant might be capable of operating, the Lathrop plant might be capable of operating at the full kind of 10 gigawatt hour run rate. And then it's also important to note that it's not just mega packs. So we do have power walls, and those are gonna, I think, be somewhat steady, but I think they're something like 10% of the capacity of the mega pack factory. So that'll help a little bit, but my expectation, what I've modeled is like a 9.5 gigawatt hour kind of deployments for this quarter. So I would love to be surprised on the positive side by that, but I don't think there would be I don't think there would be enough capacity for them to produce some like surprise 13 gigawatt hours or something like that. I just don't think that would actually physically be possible. Unless they had some inventory built up.
I don't think it would happen unless Lathrop increase their production and deliveries. I don't think they could do 13 this quarter.
Yeah, but if they're at 10 and maybe you've got one on Powerwall capacity and maybe you got like 0.2 or something like that out of Shanghai in that period, to get something truly like more upside than that, I think you'd have to have some drawdown from inventory or something like that, or some extraordinary kind of like deployments coming from what was produced previously. So that's possible, but I just think that's unlikely in Q1.
So I do have a juicy rumor to share.
Ooh.
It's going to be toward the end around Robotaxi. But next we're going to get into the Atlanta Fed. is flopping all over with its GDP estimates for Q1. We will come back to Tesla shortly. But maybe we can get that on the screen, and I'll fix my lighting while Matt talks through that.
Yeah, so we were posting about this back in late January when it first came out. Tesla, I think, was in the high 300s at this point, and the GDP forecast was, I think it was 3.9% at the peak there on the second release. Might have been early February when that one came out. But it was like, oh, wow, like that's higher than blue chip consensus. That must be good news for the economy. But what we saw in late February was that absolute cratering where you went from like healthy, positive kind of 2% range down to this minus 2% range. And then now today we had another somewhat drastic revision downward all the way to minus 3.7%. So you have just an insane swing going from minus or going from like positive 3.9 just like almost 2 months ago to now being at minus 3.7%. I've been following the Atlanta Fed's GDP Now forecast for several years now, not like religiously. I don't check it every single week or anything like that, but I've never seen a swing as drastic as this. Now they did introduce, Jordan, if you could put that back up on the screen, actually, sorry, the other one. Like last week, I think it was, they introduced this gold adjusted GDP Now. So a big part of the equation is that the US was importing such a significant amount of gold that it was throwing off the GDP calculations because, imports minus exports, your net imports or your net exports are a part of the GDP calculation. And so that was causing, you can see like almost a full 2% difference between the actual forecast and what they call this gold adjusted forecast. So that difference, that roughly 2% difference still is persisting. But even despite that, even if you back that out, you're still at minus 1%, maybe 1.5% maybe kind of range in there. So it's a very significant swing. And then, I think the thing so many investors are trying to figure out right now is, are we headed for a recession? Are these tariffs going to kill the economy? Is there some kind of looming macro risk that we should be wary of as investors? Now, markets have already come down pretty significantly this year. The NASDAQ was down about 10% year to date. S&P 500 down around 5%, a little bit less than that, I think. So we've had a somewhat meaningful correction. And of course, Tesla investors are saying that's nothing compared to what we've endured. But I think the point remains, there's no small amount of uncertainty about where the economy is going right now. A lot of investors, Peru Saxena actually posted yesterday about how a lot of cash is sitting on the sidelines, a lot of liquidity has already kind of gone risk off. And so the question now is, we get a little hint of some positive economic news, and is it just straight back to V-shaped recovery, or is there actually some more lingering, some more structural economic concern that might cause real problems and a more significant drawdown in the time to come? So maybe I'll pause there and just get your thoughts, Bradford. I've got a lot more I want to say on that, but I'm curious how that all strikes you right now.
I don't think we're in a recession, but I did hear recently, like some business investing has been put on pause as they wait to find out like what's going to happen with tariffs. So I think that may have had a chilling effect, especially in automobile and other manufacturing. So that's a little bit of a concern. I'm also interested in what's happening with gold. Like, is there some grand plan with gold, with all this importing of gold? Will Trump lower the trade deficit? How many Trump gold cards is Howard Lutnick going to sell? And is there like some kind of chance that the U.S. goes on a gold standard? I don't think so. But
I don't think so. No,
there's just a lot of moving parts right now. It's kind of dizzying to keep track of everything.
Yeah, there are a lot of moving parts, and I think, I mean, my sense maybe up until a couple of weeks ago was that there's nothing too serious to be concerned about right now. Some uncertainty, these tariffs for sure, but as I started thinking about the tariffs in particular more over the last couple of days. Like, I think it actually is a pretty big deal, especially for the automotive industry. This is something Bradford and I have been, kind of kicking around in our private conversations of like, how disruptive is this going to be? And like, what are the knock-on effects throughout the entire supply chain? So we're actually trying to schedule a conversation with Jeff Lutz to talk about it in a little bit more detail, because he's clearly more expert in this area than we are. But I was kind of reminded of some time back in 2007, so going way back in the Wayback Machine. I was an intern in GM's supply chain group, and I was basically trying to plan for some factories re-ramping as they were coming out of the July shutdown that they all had. And so my job was basically to look through the bill of materials for every single part that went on. I think it was like 4 different transmission models that that GM was using in their vehicles at the time, and just trying to find, okay, is there enough capacity at the suppliers to basically meet the schedule for how many transmissions were going to be made. And it was shocking to me how brittle that system seemed to be. Now, this was old technology, so I'm not saying that this is the way that GM does it now, but I was literally calling suppliers, and saying, hey, 3 months from now, are you going to have the capacity to produce, X number of, subcomponent, crazy long part number there. And there were a lot of them that were just like, no, like we actually don't have the capacity. We'll get going on that, but I'm not sure that we can meet those numbers. And so you've got just the tiniest little subcomponent supplier. If they don't have the capacity to increase or decrease their volume, it can really throw a monkey wrench in the entire supply chain. And so just thinking about that one relatively simple change of just kind of coming out of a planned shutdown and just how difficult that was to manage, I'm thinking of the rather massive change of 25% tariffs for imported vehicles, and what that does to demand. I mean, presumably that kills demand for several of these models that are made outside the US. And so then you'll be going from 80 to 100% capacity, a lot of these suppliers, down to 0, at least for some particular part numbers. And so what does that do? Then you all your shifts that you were handling to manage all the production, the economics of all those get really thrown into question. And so it's very easy to kind of say, okay, if that happens, then this happens. And then, this part is uneconomic, and it's very easy to foresee a scenario where at least some of the suppliers go bankrupt, and then that causes massive supply chain disruptions. And then, the whole car industry, could be in a bit of pain. So this is a kind of theory that I'm not exactly sure how robust or how resilient these supply chains are, but my sense is they're pretty brittle and will not easily absorb the magnitude of the change that I think we're about to see. And if this is not just a negotiating tactic, if Trump actually intends to make these changes permanent, as he has said, I'm inclined to take him at his word on that. And if that's the case, there will be some really massive disruptions. There will be companies that go out of business, I think. And it's just not clear to me what the knock-on effects of that could be to GM and Ford and even Tesla, although I do think Tesla is probably the best position to weather that storm. So that's my long-winded way of saying I'm actually a little bit concerned, at least within that sector, there could be some lingering damage from these.
I will say that Matt and I try to stay open-minded and curious, so we hope to talk to Jeff Lutz about this after Liberation Day.
Do you have any plans for Economic Liberation Day? Are you supposed to pull out the bunting and launch fireworks? I don't know. I thought Independence Day was kind of similar to Liberation Day, but I don't know. I guess we have to be politically independent and then economically liberated. Is that where this comes from?
So we already got a response from Israel. They are dropping whatever tariffs they had on the U.S. So moving to 0 tariffs. So I'm guessing the U.S. will not apply any tariffs to Israel. I'm curious what the other countries do. A lot of commentators are kind of who were generally favorable to Trump. There's been this kind of swing, and I was never in the tariffs are good camp. But that's where we started. So Trump said tariffs were his favorite word. People came out and said tariffs are good. Then Trump came in the office and they said, well, tariffs are a negotiating tactic. There's nothing to worry about. And I did parrot some of this. Now we're in this phase where um, it it appears that Trump is serious about tariffs, and um, people are coming around to like tariffs are bad. So it's a bit too much. Um, there's some people that think that Trump wants to create a recession in order to lower interest rates, and so that the U.S. can refinance their debt at a lower interest rate. So, like if there was a recession or whatever, the Fed would be motivated more to lower interest rates. So then all this debt that the United States has coming due in June could be refinanced at lower rates and like farther out. Any thoughts on that, Matt?
I think that's a little too much of a Rube Goldberg theory to to really be realistic. Like, Trump has talked for a long time about tariffs and about helping the working class and about bringing manufacturing back. Um, I just I kind of take him at his word that is actually his priority, rather than like getting a great rate on the the debt that the U.S. owes outstanding. To be clear, like it is his opinion that he wants rates to come down. He's been pretty vocal about that.
Yeah.
And I think if you look at what Scott Besson has said, like, it would be a lot easier for them to do what they're doing if rates came down. But like, I think to go to believe that he'd want to like plunge the entire U.S. into a recession and cause all that kind of economic calamity just to lower rates, that to me just seems like you're grasping at straws a little bit. And I think that like something that makes a lot more sense is just that he actually wants to bring back manufacturing, and putting in these tariffs as a way to incentivize investment in the U.S. and bringing U.S. jobs back to middle class workers. And if he's success, like he's talked a lot about the long game, and he and Elon and others have all said that there could be some short term pain. So I don't think they're by any means saying that there won't be a recession, but I think their opinion is like the current economic situation is unsustainable, just with the federal debt and their deficit, and how much we're paying in interest. Like, something has to be done, and to make those changes, I mean, federal spending is a massive contributor to GDP. So everything Doge is doing, while it's a good thing, I think we would say, to eliminate waste and fraud in the system, arithmetically that will reduce GDP. So it's important to keep that in mind. Now, I certainly think it's a very healthy thing to do, and so we shouldn't be too afraid if we even, like, maybe we technically enter a recession and maybe you have like negative 1 or 2% GDP growth for a couple quarters. That wouldn't necessarily be the end of the world in my mind, if a lot of that is driven by just lower government spending, and we're getting ourselves onto more sustainable footing where you're directing those economic resources to like better products and better services. I think that would be a good thing. So I think there's a fair amount of uncertainty right now with the way all of this is going to pan out. I think a recession could happen, but I think I'm leaning right now towards it not being very significant. Although I do think there's pockets of the economy and individual companies that are probably going to get pretty hurt along the way.
So I want to bring up this question because this goes with what we're talking about, and I want to make some points around this question. So it's from Vigo, a big supporter of me for a long time. He says, I've been very worried that those in charge have no idea how the economy works. The fact that free trade is not seen as good is baffling. I do think that trade is not currently truly free. So if you have any tariffs, like nearly every country has like tariffs against the U.S. And the U.S. takes this thing called most favored nation status. So this was part of I believe the WTO, where the U.S., for whatever reason, the tariffs they charge are the same as like the most favored nation. So you can research that. So the U.S. uniformly has a pretty low tariffs compared to everyone else. So Trump wants to balance that out, but how he does that's important. I have pretty good confidence in the people in the administration, especially Scott Bessent. I don't know if we talked about this, but the All In podcast interviewed him, and he was actually part of the team that broke the back of the Bank of England in 1982.
Legendary stuff. Seriously.
And was the one who suggested it to George Soros. And he or the guy right above him told Soros, well, I think we should do it with 100% of our money. And Soros is like, well, why not 300% or something like that? And much was made about the $20 billion they made on the trade, but also they made another 20 billion on the flip side of the trade. So it's not just like the trade you make and how much you make on that, but then like the knock-on effects. And that's something Matt and I are thinking about. I'm guessing Howard Lutnick was pretty involved with researching how to go about all this trade stuff. He's a pretty big nerd on research. He did a great job in recruiting the cabinet, recruiting Elon. He's the one who came up with Doge as the acronym for the Digital Services Department. And he also came up with the name of External Revenue Service. And he gives an example in his All In interview where he did some really nerdy research that reminded me of my Megafactory research, where he put a camera on a ship that went through the Panama Canal. So I'm guessing Howard Lutnick has researched this extensively. And I'm hopeful that over time, negotiations will happen and we'll come to a better understanding and not, enter this tariff war that we had like around the Great Recession or I think it's after the Great Depression, actually. So I've talked a lot. Matt, your turn.
Yeah, no, I mean, I think the original question was like, do these guys even know what they're doing?
Yeah.
And I've seen a lot of people basically saying basically that everybody in charge has no idea about like Econ 101 and like the deadweight loss of tariffs on like the overall economy. But like if you listen to them, like that's the first thing they talk about. They say that like literally everybody knows that because it's taught in Econ 101. But what that misses, what that simplified analysis misses, I forget which one of them said this, but it was some of the like expertise and the know-how that comes from actually manufacturing a product. So like part of the reason Tesla is so good at building their cars is because like they literally have like the engineers working like right next to like the people on the floor that are actually building the cars, and they're seeing how they're made, and it's all under one roof where you're like the people designing the cars and coming up with the changes, like actually see how it's going to be installed, and they can actually go to the guys on the floor and talk to, hey, what are your pain points and how can we do this better? When everything is simplified to an economic graph and it's like, okay, you import this widget and you save 3% because like the costs are lower. That's like a very static view that doesn't take innovation and like future improvements into account. So I think the one thing I've learned as a Tesla investor is just how important it is to have like design and manufacturing working together and engineering working together. Like those are like, you can't separate those functions. And what the US tried to do was to say, we'll do the designing stuff, we'll do that high value added work, we'll outsource the manufacturing piece of it, and like we'll all be better off because we'll split that. But like you just can't split that and expect to progress in your like competence to design the products. So I think that was a really good way of framing this, that like we actually do understand the theory of like tariffs and why it results in a deadweight loss. But just in practice, you don't want to actually do that. And then the last thing I would say on this point is, aside from, just like the economics of it, like for national security reasons, I think there's like reasons you want to have some manufacturing in-house, even if it is like more expensive and it ends up being inflationary to, say, make our own COVID masks here. Like what we learned from the whole COVID experience was like, if you are just relying on a potential adversary for all of your like critical healthcare equipment or defense equipment or like grid infrastructure equipment, like that's a really vulnerable place to be in. So even if you have to pay a little bit more just to get that economic security, it's probably going to be strategic for you to do that. So my sense is we're going down this path, and it's going to remain in place at least for the remainder of the Trump administration's time. I do think that a lot of this will be a negotiating chip. So as countries like Israel come forward and say we're going to get rid of tariffs, I think Trump will say, great, we'll do the same. And so then, that will create more free trade with less deadweight loss that all those theorists, are concerned is not there in the administration. But I do think there will be pockets of this that, Trump does want to remain permanent. And I do think like chip manufacturing and, some other things, he really wants to incentivize those companies to establish some footprint here in the US.
So let's talk a little bit about how Tesla benefits. So Tesla is incredibly vertically integrated compared to other auto parts makers. They're one of the few automakers that makes their own seats. One of the good things they did early on, listening to Sandy Munro, is Sandy's like, seats are a big source of profits for the seat makers. So Tesla took that into consideration and pretty quickly figured out, oh yeah, we can make the seats ourselves.
The seats are so good, by the way. They're so good.
They make their own electric motors in Nevada. So they wind the motors. So there's a lot of vertical integration, but they do have a decent part supply that comes out of Mexico. So Elon is correct in saying Tesla will not be unscathed. So he's saying that Tesla will be scathed. So I do think
how scathed will they be?
Yeah,
that's the question.
I do think it'll be minimal. So I think he is trying to show that he's not getting some big benefit from this whole tariff thing, but I think other automakers are going to get hit much worse, where Tesla, maybe the impact is at most like $3,000 a car. I don't think it's going to be that high.
That was exactly, like, I was doing some rough math and I thought like maybe $2,500, but that seemed conservative to me. I think it'll probably be a little bit less than that.
Yeah. And other so Tesla is probably less than 5% impact to the price of the car. And other automakers, it's looking like 10% or more. It's going to be the impact. And there's some that are like fully imported where the impact is 25%.
Yeah, that's something I really have wanted to dig into a little bit. Like, which models right now are actually made outside the US? Because like those, like, how do you have any demand for? I'm just making up a random one, but if you've got like some Jeep Wrangler, actually, I'm pretty sure those are made in the US. But like, I don't know, pick your car, some whatever. Let's just say a Ford Expedition or something. Completely making one up. If that has a $25,000 tariff that's just slapped on top of it, and you go from or you basically have a 25% price increase overnight, like how does that not entirely kill demand for that particular model? And so some of those buyers will go to other vehicles presumably, but like it's just like that will, I would imagine it takes demand down like 75% or more. And if demand is down 75% or more, then all of a sudden it's not economical to produce those cars anymore because you've got so many fixed costs you're trying to absorb.
Yeah.
So that's where, like, I think on an individual model basis, like you're probably going to just kill a bunch of models. And then that's going to impact a lot of plants. Like I don't know how you don't shut down some of these plants that are in Mexico that are producing exclusively for the U.S. market. I think it just kills a bunch of those. And I haven't seen anyone do a detailed analysis of like which models are those, and what are the implications for like competing models. I'd be very curious if anyone in the comments or if anyone has seen that, because to me that's a pretty important question.
Yeah, I think that research would be like Sandy Monroe type research as far as how much people would charge for that. So I'm guessing we won't see that for a while.
Well, I think some of it would be pretty easy though, like just literally which models are produced in Mexico or Canada. I think there are some truck models and like some minivans that are produced in Canada. That'd be pretty bad news, I think, for those vehicles. Yeah, and I know there are some in Mexico. I just don't know which ones that they are. So,
is your understanding if final assembly is in Canada that it's 25%?
Yeah, that's the way I understand that executive order. Yeah.
Okay.
And then 1 month from now, it's the parts will get that 25% as well.
Yeah.
So this is a really big deal. And now I think Tesla really is best positioned. First of all, they've got no plants outside the U.S. that are building cars for the U.S. market, so they avoid that big 25% penalty. But if it is only let's call it a 10% impact at most on the overall price that they have to charge. Meanwhile, their peers are increasing prices, like 15, 20%, something like that. Tesla would stand to gain a fair amount of market share, I think. But I think this comes back to one of the comments I saw. Like, we're talking a lot about like tariffs and short-term economic impact. We're 2 months away from Robotaxi. Like, does any of this actually matter? Like even if Tesla is hit really hard and sales are down again in Q2, we're not invested in Tesla because we think like demand is going to raise 20% this year, right, on their vehicles. So like it seems to me that sure, a lot of this stuff is nice to have if Tesla can sell some more vehicles and like relative positioning and relative like price is slightly better. But isn't that the story right now, that like there are lots of new Model Ys with manufacturers' plates apparently being driven around Austin right now in preparation for launching the Robotaxi network in June. We're like months away, almost weeks away now.
Yeah, so a rumor, but rumored to be driven around by Tesla's, I don't know if they're called ADAS or whatever, but with safety drivers. Don't know if it's true that they're safety drivers or they're just making sure they have every like edge case looked at in Austin. That would kind of like get rid of some of the advantage Tesla has, like if they need to do this every city. But one thing Tesla could do to make it go smoothly when they do launch it to more employees in June is they could test it with a smaller group of drivers, test the app prototype that they have, and start to iron out the wrinkles with a smaller group of test drivers before they open it up to more of their employees. And last we heard, they had 22,000 employees in Texas. I'm guessing it's meaningfully higher than that, but probably not at like 30,000 yet. And a lot of people use Uber and Lyft to commute to and from work. So for Tesla employees, this will be a big benefit. And I'm guessing they'll get a bit of a savings. Maybe Tesla offers it for free for employees, but they could easily charge a couple bucks a mile or maybe $1 a mile at first.
Yeah, so I do think that it would almost be crazy if they're not doing that sort of testing right now. So while it is just rumors, I've heard from multiple sources that they're seeing a lot of these new Model Ys with manufacturers' plates just like driving around. And like, if you're actually going to launch an app that has like the, pick me up here, drop me off there, I'm going to the airport, which airline are you flying? Like, you need to start building that stuff in the app. And, at least the app that you and I have right now, it doesn't have any of that functionality. And where we've had some pain points in the current release of FSD is in like the first and last 100 feet. Like, where are you specifically taking me? And like, I was at a fairly large high school for seeing a play the other day, and it was like there was no option to choose like which door you want me to drop off. So like it was like, or if you're going to a mall, for example, you could like you could have like literally like a 3-minute difference between this side of the mall and that, and there's not a good way to integrate which choice you like where you want to park for those sorts of things right now. So I think there's going to be
some malls where it's a 10 or 15-minute walk from one end to the other. It's pretty crazy.
Yeah, it is, but like, so that's something that Tesla has not optimized at all on the version that we have right now, that they're going to need to optimize extremely well in the version that works for Robotaxi. So it's absolutely my belief that they're working on all those sorts of things right now. So you made the comment about it'd be bad if they had to do this for every city going forward to like deploy all these vehicles.
Yeah.
I think they probably will do that initially for the first, I don't know, dozen cities or something like that. But my sense is a lot of this knowledge is going to generalize to other cities. Now, you probably will always have some like manual mapping you'll need to do, like for airports, for example, like figuring out what airline and like where's the Uber and Lyft like pick up and drop off. Like you're going to have to, I think, manually program in some of that sort of stuff. But I think it's not going to be like the like HD mapping effort that goes into like what Waymo does every time they enter a new city.
You make a really good point around figuring out drop off. So they would need to do something similar around pickup. So the person doesn't own the car; they can't just like hit the blue button and start the drive in their driveway. So they have to figure out pickup as well. So it's possible that they figure this out now. And work on that. That could be it, rather than like mapping specific things about Austin in particular.
Yeah, that's my sense. Is like it makes it, if you're thinking of like let's say you've got some weird edge case in Austin or something like that. Maybe the way you handle that is if like if the Robotaxi gets into some weird situation and it's unsure how to proceed. You like send that right back to the AI team with like a high importance marking, like extreme urgency. Let's figure this out. Update the model so that it can handle that particular situation. But I think that's going to be a lot easier way to handle those situations. And I think where you want like the humans to like help with rolling this out is just like the generic pickup and drop off stuff. Because like that's where like the app is nowhere near ready for that stuff right now. So, my sense is have that team work on that for 3 months or so, get it ready. I'm sure when they launch, there's still going to be like bugs and issues, and it'll do some weird things at first. But based on how quickly they've improved, since V12 and V13, my expectation would be they have similar level of improvements on all these just like weird pickup and drop off things that we're seeing right now, and those become a thing of the past.
And also about the airport, so arrivals and departures and the ride share pickup spot for Austin's airport, if they could dial that in and be a part of that would be great as well. I had a question I want to share here. Do you think Tesla V14 will have to be released before robotaxis are activated in Austin in June? And
I thought you were going to say your opinion on that.
I'll give my opinion. So I actually don't think so. They do need to add the functionality Matt was talking about, but for me, version 13 is extremely safe. The model that's on the Cybertruck is different. So I've experienced it on the X and the Y, and it's really good. It's very safe, no unnecessary hard braking. And I tweeted today, I said that V13 makes better decisions than I do. So when I'm driving and I don't have FSD turn on at all, and I'm just kind of in a different mode of driving, my decision making is worse than version 13. When I'm supervising FSD, I'm like hyper vigilant, so that's different, right? But I think it's making better decisions than I am as a human driver. It's also more passive, so we're not going to get into road rage or anything like that. Um, it also does really well now with emergency vehicles and police officers, things like that. Um, I certainly think that the version 14, or maybe it's 13.3, where they have the 3 times bigger model and the 3 times larger or longer context window, certainly that'll help.
Mm-hmm.
But I don't think it's necessary. And there are times where I feel like I could be in V13 and have my eyes closed and be totally safe.
Yeah, which is kind of a crazy thing to say, because like there still are interventions from time to time, and like I actually had a bit of an argument. I posted a while ago. I had like 2 interventions the other day that were critical for not breaking the law, but were not critical for like avoiding getting in an accident. So I was sitting at a red light, and like a green right turn light turned on while the red still remained, and the car started to go. This happened to me twice. Like that's wrong, but the risk with that in that particular incident is that you get a ticket. Now, if there were cars coming the opposite direction such that it was not clear to go and it proceeded in that case, then I would agree that that's a safety critical incident. But since I've been driving version 13, there's been literally 0 times where I've had to intervene to prevent an accident. I had another intervention yesterday because my car was going to turn right, and I knew with this particular turn, it immediately, like the right lane that it was turning into immediately merges left, and there was kind of a steady stream of traffic. So I would have like just kind of freaked out those people a little bit, like, why are you turning? And then you're gonna have to wait or like really merge in. But the car was not going to do something dangerous. It was just awkward. So there are still some things that like would be great to clean up, but I have not had any experiences on version 13 yet where it is making a decision that is dangerous.
Yeah. There's a question about hardware 3. Right now it's no bueno in my area. When I turned on my old Model Y on March 17th, the version of 12 whatever
12.6.8 or something like that
was not good for me. Just very hesitant, wonky, very frustrating. But it was safe. It didn't have hard braking, but it was, overly conservative, and just felt very unconfident, like a little scaredy cat. It's possible they get there. I'm not super confident on it, that they make it so that it's Robotaxi capable. And it's unfortunate for the people who still have hardware 3 cars. But the way I look at it is, on the other side is there's over 1 million hardware 4 cars in the US. There's over 1 million in China. So, that's your early Robotaxi fleet that could operate in the US is those. And if they decide to start something in China once they improve it, they have a lot of hardware 4 cars in China.
Yeah, so my experience was very similar when I traded in my Model Y, my hardware 3 Model Y in early February. It was just like, so probably 50 to 60% of my drives, it would just do stuff that was so annoying that it was like, it just would not pass the wife test. And I would be yelling at it sometimes, just like, why are you doing this? The difference between that and what you have on, V13 on the latest hardware 4 cars, like it is just so smooth, like all the time. Maybe my one criticism would be that you still have this like stop sign. You have to come to a full and complete stop. Like that's mildly annoying. But what I've actually noticed is if you just understand that that's going to come, it's not particularly rude to other people. It's just like, oh, why is this guy going like more slow than the normal person would?
Yeah.
It's actually like I found my whole driving experience has just become a lot more zen, where I really am just like, all right, like I will be escorted to my destination comfortably and smoothly, and I'm just like thinking about life or listening to a podcast, and it really, I think it's probably hard for people to understand what the overall experience is like who haven't experienced it, because it really does change. It's like when you're driving, like you're always on high alert, like, oh, can I get in here? Like, do I have, and you're just not doing any of that. You're not spending any of your mental capacity on like trying to figure out, is there enough space for me to get in here? And so like, it leaves you in a more calm, like headspace, which I have just absolutely loved. And that was not my experience on hardware 3, because with hardware 3, you're just like, all right, when's it going to fail? And like, oh gosh, what's it like? All of a sudden, like it'll be doing really well, and then you just spike up because it does something really dumb or really dangerous, which certainly happened also from time to time. But it really is night and day. So if you've not experienced hardware 4, anyone in the audience, I highly recommend go do a demo drive.
Yeah.
FSD with hardware 4. Like you can hear people talk about it, but just go try it. There's no replacement for you trying it.
And not on a Cybertruck, because that hasn't gotten fixed yet. But yeah, on any of the sexy vehicles, check that out. So we basically covered it. Short interest has increased recently, so it went up from a low like around February 4th. From about 2%. Now it's 2.8%. So it's gone up nearly 40%, but it's still at a very low number. The people who bought the puts, off of Tim Walls or whatever, they're probably going to be crying a river of tears. I'm curious, Matt. So, there's going to be some kind of reaction on the 2nd of April after we get production and delivery. And then there's going to be waiting time before we have the earnings report. How are you thinking just real generally about that time and the potential reaction after earnings?
Yeah, I've spent a lot of time thinking about that, actually.
Really? Okay.
So I kind of wish that the Tesla had not fallen as precipitously as it had. If we were still over 300 something, then I think I'd be a little bit more confident that, we're going to have, like, the market still doesn't realize how bad, P&D is going to be in Q1 earnings. And it was definitely my expectation that we'd have a drop kind of going into this general time frame. But since we dropped so much, I mean, we were more than 50% off the highs when we were down in the 220s. So since we're down that low, I'm honestly not sure how the market is going to react. Where my earnings estimates are coming in, I think I'm around 30 cents now. I keep revising it. We'll see when we have the actual numbers tomorrow, how much of a change that might be. But assuming there's no big change there, my expectation still would be that, their earnings is a bit of a miss, at least relative to what Wall Street is expecting right now. Now, maybe I think their expectations will continue to come down. And so as I'm thinking about it, I really just land in the space, and this is anticlimactic, but I just don't know what's going to happen in the next, couple of weeks. It could be the case that we've got this continued recessionary fear, tariffs, and all that carries the day, along with weak demand that we've seen, like the P&D report. I think it would be surprising if people say, "Oh, that was really good." I think, like, no matter what, even if we're at 400,000, which we won't be, but like nobody's going to be like, "Oh, wow, like good job, Tesla," because the headline is still going to be, we're down double-digit % from Q4. So I think it's going to be very hard to have like positive sentiment in the next month or so, unless there's, I don't know, some sort of surprise on, like, they release some information about FSD subscriptions or something like that. And then when we get to the earnings call, I mean, it seems so often that a lot of the reaction can be just based on like Elon's mood, or does management seem upbeat on their outlook in general. And I would think that the numbers for Q1 are probably going to be pretty bad, but I would think management is probably going to be pretty thrilled about the fact that we're, like 2 months away at that point from launching the Robotaxi network. So I think that's where the whole conversation is going to be, and that's going to be a lot more real and digestible, I think, as opposed to when they've said that in the past so many times, and it was like, yeah, maybe 12 months from now we'll be there, and it's like, no, now we're actually doing it. So yeah, I really don't know what's going to happen in the short term, but I think I'm becoming more convicted that 12, 24, 36 months from now, we're going to be talking about how we roll out robotaxis more aggressively, and we'll start seeing the impact of robotaxis on the actual bottom line of the company, and we'll have some additional disclosures around that, which will be pretty exciting. So short term uncertain, long term I'm getting pretty optimistic.
We do have a big announcement. If you haven't heard, we're hiring, and I'll talk about that in a second. We'll go ahead and keep that on the screen for now. I wonder if Wall Street will ask about the Model Y ramp or the re-ramp of the Model Y, because it won't totally be done in the second quarter. Maybe they'll get back up to capacity toward the end of the quarter. So it'd be great if they gave context on that. Also, if they gave context around the tariffs, how might that impact Tesla? That would be great context to give. I don't think they'll clarify much around financials around the cyber cab or around Robotaxi.
I don't think so either. Yeah.
It would be great if they talked about pricing strategy, because I think that's appropriate if you're going to be just charging employees. What's a pricing strategy, and is Texas going to force them to have safety drivers? I'm going to ask ChatGPT deep research about that after our video today. So we are hiring a data engineer, and if you've done this kind of work, you would know what that means. But basically, you're comfortable around big data and analyzing data, huge databases as far as pulling them down. So like grabbing them from whatever source are, ingesting and extracting it, transforming the data, all that. And because we're still fairly small, so we have a team of 13, be our 14th hire. This person would also have to both develop and maintain the full stack. So we would need to get this data on AWS, so it's not just on one computer. So it need to be in the cloud for us to use. So we're just making a really big push on data and automation. But there's some cool projects we're working on that we already are collecting data on. There's some data we're collecting on Megafactory Lathrop.
Yeah.
Also some data on stock options and some other things. Go ahead, Matt.
Yeah, I mean, I was going to say, just to give a little more context of like what we're trying to do, like we are obviously very big believers in AI, and we want to be investing in companies that are taking advantage of that, but we're also using it heavily on a day-to-day basis. Now, because we are financial advisors, I want to make very clear, like we're not like putting client data into ChatGPT and say, like, what should I put this person in? Like that's not what we're talking about. But we are trying to make sure that we are being as efficient as possible with our processes. So I think we're trying to reimagine how we can, from a process standpoint, do some of our day-to-day activities more efficiently, leverage AI to make better, smarter, faster decisions. But then we're also using it on like the research side. So we're trying to figure out how some like option strategies, as you mentioned, how can we better optimize those? And that's a pretty fun project, I think, if you've got if you're interested in investing and big data. I think it's a pretty interesting opportunity. So if people are interested in applying, Bradford, where can you? Oh wow, perfect.
Boom, I was ready for it. Send us your resume to @Rebellionaire on X. Hit us in the DMs. We are wrapping up the first round of interviews, but if we get some new ones, that'd be great. We may have a bias towards people that live close to Indianapolis, because you'll be working fairly close with me for a while. But I'm open-minded, so we'll see what happens. I don't know why my lighting faded. Like I have this big light shining right at me. It's kind of crazy. Anyhow, he is Matt Smith. I'm Bradford Ferguson. It faded the lighting because of the pop-up. That's why. That's weird. that's cool, I guess.
The more you know. Can we get
Yeah.
that little rainbow going across?
I'm Bradford Ferguson. We're with rebellionaire.com. What we do is we help Teslaonaires with their Tesla stock, help them manage their risk with using covered calls to generate some income. We do some trimming and adding. I think that's where we can add the most value. But it isn't something that we do frequently. It's like a once or twice a year at sentimental highs and lows. And also add some other high conviction names. So that's what we do at Rebellionaire. You can check us out there. And with that, thanks for joining us. We'll be on next Tuesday at 4 p.m. And with that, we'll say bye for now.
Bye for now.